Hello and welcome to the Tie's Fundamental Value Podcast. I'm your host, Joshua Frank, co-founder and CEO of the Tie. Today, I'm incredibly excited to be joined by Mitchell Dong, founder and CEO of Pythagoras Investments. Mitchell, it's so great to have you on.
Yeah, thank you. Look forward to chatting about all things crypto.
Yeah, and so before we even kind of get into crypto, you had a very storied career prior to discovering digital assets in the energy industry. So can you kind of walk me through your career prior to entering crypto?
Yeah, when you say storied, it makes me it makes me laugh. Yeah, no, for the first 25 years of my career, I used to build, develop, own, and operate hydroelectric, solar, and cogeneration power plants. So I basically was a power plant developer from renewable energy. And even as a teenager, I was very interested in the environmental business and how the interplay between energy and environment and how we have to produce clean energy. And this goes back to the 70s. So the first 25 years was building renewable energy plants before it became extremely popular.
And so one thing that really caught my eye was as I was going through your LinkedIn profile is obviously you've had a lot of successes, but one thing that I thought was rather interesting was that you highlighted all of your failures and also the lessons that you've learned throughout those failures. So, what are some of the most important lessons that you think you learned, in your pre-crypto life, but also in your foray into this industry as well?
I learned that I learn more from my failures than I do my successes, because when you're successful, you just kind of bask in the sun. But when you fail, you really have to do some deep reflection about what went wrong, lessons learned, and it's a struggle. So you learn a lot more from your failures, and you also learn to be very humble. If you become arrogant, the market will punish you, and you have to plan for what you don't know, because I believe that it's what you don't know that could kill you or hurt you. So it's constant search of the unknown.
And so what was when was the first time that you kind of stumbled upon crypto, and what was your initial foray into the space?
Yeah, so it came on the heels of a failure. I just failed developing two very large $2 billion solar power plants, one near Las Vegas, one in Saudi Arabia. And the financial crisis of 2008 really hurt those businesses because the utilities demand fell through the floor, so that they didn't need or want incremental power, no less solar power plants. So I was looking for something new to do. And this was in the 2013-14 era. And I looked at all the kind of new technology fads at the time, not just blockchain, but 3D printing and drones and machine learning. And a employee of mine had some mining rigs in his apartment the time I was living in Harvard Square. And I said, wow, it sounds like printing presses. So I said, Tim, set up some rigs for me in the basement. And we set up these ASIC cards. And it looked like a Rube Goldberg contraption in the basement next to my laundry room. And it was hot and it was making noise. And every time
what did your wife think when you set everything
so she
up?
went down there and she said, you're gonna blow up the house. It's hot and everything. And then we
did you install ventilation or anything like that? Or you guys had no idea? That's awesome.
No idea.
That's awesome.
So this was like a giant science experiment, a science project. So we got the first electric bill. The electric bill went from $1,000 to $10,000 in this house. And we had only made, a couple thousand of Bitcoin and Litecoin. So we shut that down. But when I went to sell the Bitcoin, I noticed that the prices were all over the place. And that's when the so-called light bulb went off and decided to do arbitrage. So that was the first, then we started a fund, and arbitrage was the first thing we did.
And so, yeah, my initial, when I read that and then also hearing you say that, the initial thing that goes off my head is you had such a career in the energy industry, right? And so my question, to you is like, did you not think for a second, like, hey, maybe there's a more efficient way to do this? I have a lot of experience with energy. If, in my house, I can't mine it efficiently, well, maybe I can go off on my own and I can build a more efficient way to do this. I can get access to cheaper and, electricity at scale. Was it ever a thought, or was it really just, this arb thing makes no sense. It makes no sense that the price on, at that time, probably Mount Gox and BTCE and Bitfinex were just
Right.
totally different. Like, I mean, did you ever, kind of consider going down the mining route?
Yeah, no, definitely. And, I was thinking, what would I do in 2014 if I knew then what I what I do now? And I would have made a lot more money if I had started a mining business, or if I started an exchange, or if I just bought and held Bitcoin, right? I mean, if I bought Bitcoin at 100, I'd be up, more than 100x today, and I'm definitely not up 100x on
It's
on my business, on my
it's nice
recent
it's nice to
capital.
have what ifs. What
Right.
ifs are nice. I mean, one of my co-founders was doing short-term Bitcoin loans back at the same time, 2013, and he was loaning them out and earning 100% interest on Bitfinex back in the day. And he's
Right.
like, this just seems too good to be true. I'm not doing this anymore. He's like, I don't know if I'm gonna be able to get my money off or what's gonna happen. He just pulled everything. It's like a what if. There's so many people in
We
this industry that have those.
Yeah, no, we did that too. I mean, on Bitfinex, this is 2000 and 14, 15, and
Yeah.
16. We were making, I don't know if we're making 100% interest rate,
Or
but we were making,
50% or
yeah,
ridiculous. Yeah.
50% or
Yeah.
20%, whatever.
Right.
But then we got so enamored with it, we had 50% of our assets going into August 2nd, 2016, when Bitfinex got hacked and lost a third of their assets. And we were like nail biting and hanging on the cliff with our fingernails, wondering if we're ever going to get our money back. We did eventually, they assigned a 1/3 social loss. We had 50% of our money there. And we sold the BFX token, which represented a percentage of their revenues, for 50 cents on the dollar. So we cut our losses to 10%. But it was a nail biting, highly stressful, I don't know, 4 or 5 months there.
Yeah.
If we had held that token, we would have gotten all our money back in early 17. And if we held it through the end of 17, we would have made 10 times our money, but we didn't.
It's all, you can say all these things in retrospect, right? But so can you kind of walk me through, obviously when you initially started, your fund or I think Pythagoras actually was your fund before crypto, correct?
Yeah, Pythagoras was my family office
Gotcha.
starting in 2005. But in 2014, we needed a vehicle, and we had already opened accounts in the name of the family office. So we converted it from a family office to a fund
Okay.
in 2014. Initially, with just my money, and then in 2015, we brought on our seed investor, who's currently our biggest investor.
And so when you initially started, was the focus, I mean, you were, I mean, we already kind of got into it, with this lending on Bitfinex, but was the focus purely on arbitrage? Was it purely systematic from the start? Like how did you initially start kicking your tires in the space and
Right,
uh
right.
and getting involved?
Yeah, no, it was always systematic. It was always automated, and there wasn't, like there. I and my partner weren't sitting there watching screens.
Right.
We were programming and watching the software run. But I know your podcast is public, but I want to tell you something confidential about our investment strategy. So hopefully your viewers won't spread this, but our secret sauce is buy low and sell high, and that's what the software is programmed to do every second that there's an opportunity. You're
And
supposed to laugh. You're supposed to
I'm
laugh.
laughing. I'm laughing. I'm laughing. I'm laughing. I'm laughing. It's funny. I actually talked to somebody else. And I mentioned that I was bringing you on, and they said that I should be prepared for that. So I was actually prepared for that comment. Um, but that's that's very funny, and it makes sense. And so speaking of speed, you know what was the market like back in 2013, 2014, versus today, in terms of what liquidity looked like, what arbitrage opportunities look like, what latency looked like when actually connecting to exchanges, what like how well did APIs of exchanges even function to trade back in
Right,
2013 versus
right.
today?
Well, latency wasn't even a word that you'd ever consider because
Right.
the spreads were so high. We were the first strategy was buy in the U.S., sell in China.
Yep.
So you buy on Bitfinex and you sell on OKEX or B and BTC China.
Right.
And all of those exchanges, the Chinese exchanges, offered Bitcoin in US dollars. But the Chinese were going crazy and they heard that their cousin, their brother, whatever was, had made a million Chinese yuan, buying Bitcoin. So they were all bidding up the price. And because of Chinese capital controls, and because most of the Chinese retail punters prefer Chinese language websites, they didn't look at the rest of the world. They just bought Bitcoin in China and drove up the local price of Bitcoin on these Chinese exchanges.
And so
Uh,
how big were the spreads?
oh, they were huge. I mean, at least 10%, 20%, 30%. And then gradually from 14 to 17, it shifted to China, excuse me, from China to Japan and Korea. And there the spreads were even more ridiculous. There were some trades we did in Korea where the price of Bitcoin in Korean won was double the price, in US dollars.
And so was your
That didn't last
were
long,
your
but it
were
was
your
over
constraints
50%.
just how fast you could move capital on, and withdraw from exchanges and things like that? Were you guys taking out loans and things like how did you execute this most efficiently, right? I mean, if there's a 200% premium somewhere and 100% premium somewhere, obviously you want to get as much capital there as fast as possible. So how are you guys able to accomplish that? And what
Well,
limitations did you have?
I use the example of Japan because it's the simplest to understand.
Yep.
Basically, you have U.S. dollars. You're buying Bitcoin, say on Bitfinex or Bitstamp or one of the
Yep.
more greater volume exchanges that existed in 2017, and you'd be selling on CoinCheck, Xife, Coin, which is now called Liquid, in Japanese yen.
Yep.
And then you take your Japanese yen, you go to SMBC Bank, where we have a bank account, convert it to US dollars and wire it back, US dollars back to, say, Bitfinex to buy more Bitcoin in US dollars. So it was how fast can you recycle the money?
Right.
Of course, Bitcoin moved instantly,
Right.
but moving Japanese yen, US dollars took on average 3 or 4 days.
Right.
So you could only recycle every 3 or 4 days.
Right.
But the spreads lasted for almost the entire year, at least half a year. So we were just moving that cash between Japan and U.S. as fast as possible.
And so now, when you look at the market, obviously, even looking at, the height of the 2017 bull market, right? I think sex.io had like hit 2,200 or 22,000 or 21,000 for Bitcoin back in December 2017, and Kraken and some other exchanges were at like 19.6, right? And so those, there were clearly giant differences in spreads back then. But if we look today, when Bitcoin hit, 19.8, 20,000, we're talking, a matter of $60 between the highest priced exchange and the lowest price exchange. And so what types of inefficiencies are you seeing now versus what you were seeing before? Are they easier to exploit? Are they more difficult to exploit? And how has scale changed over the last couple of years?
Sure. No, markets evolve and markets are constantly changing, and our strategies have to constantly change. Um, I'd say the shelf life of our average strategy is only 1 to 2 years, and then the market changes. Either you get arbed out because there's competition coming in, or the market has just fundamentally changed. Like instead of all retail, it drops to 50% retail, or instead of being hot in one area, it's hot in another area. And one of the biggest shifts from 17 is the growth of the derivative markets. So where we used to trade 100% spot through 17, in 18, 19, and 20, it shifted to trading, I don't know, 90% derivatives, meaning the perpetual contracts, the futures, and the options. And there's much greater liquidity. There are many more products. There are many more arbitrage opportunities in derivatives than there is in the spot market. So that's probably the biggest difference compared to 2017 is trading derivatives.
And so, when I go out and I talk to a lot of quantitative funds, one of the biggest things that I hear is just the lack of scalability of individual strategies, right? Saying we're capital constrained at $10 million the strategy, or $20 million the strategy, or $5 million, or whatever the number is. And so how scalable are you, seeing individual strategies today versus before? And, I obviously depends on the strategy, right? And what you're doing, but what types of scale are you guys, seeing? Are or do you think you're maxing out the scale on certain things that you're doing? I mean, do you think there's further room to invest in strategies that you're building?
We run between our two funds 100 million, and we are continuing able to make returns that our investors are satisfied with. On peak days, when things are really crazy, I think we could deploy 2 to 3 times what we have. But we're constantly developing new strategies, right? So some of the newest things that we're going into, of course, things like DeFi has greatly increased opportunities, with it growing from $1 billion to 10 billion, or from 100 million to 10 billion just this year alone. So right. that area has huge scale, which is unexploited. Another area is, I guess it's related to DeFi, but it's just the borrowing and lending space. There are many, many more lenders and borrowers, and we see opportunities to borrow low and lend high. The crypto option space is really interesting and has grown by 10x, this year. So all of these and you never know. The crypto is so crazy that you wake up one day and all of a sudden there's a whole new thing, right? So there's constantly new people, new products, new ideas, new government regulations or lack of government regulations that create more and more arbitrage opportunities. And you just have to, our team of 11 people, most of the people are constantly on the hunt for new trading strategies.
And so have you then, you mentioned you having a fund around, or between both your funds, around 100 million in AUM. Have you been returning, funds to your LPs over time, because you can't reinvest them, or are you continuing to reinvest any?
No, we were constantly reinvesting. I mean, the turnover of our, trading strategies is, I don't know, a couple times a week is our turnover, or
yep.
more. I mean, when things are really crazy, it could turn over couple times a day, but yep. on average. But in terms of returning capital, because we don't have capacity, that's not been an issue.
And so how many assets are you guys actively trading, and how has that changed over time?
You mean like how many coins?
Yeah, how many coins? How many coins?
Yeah, we do the top 10 crypto, whatever cryptos have derivatives, and we're on 20 exchanges, but because of counterparty risk, which is the biggest risk we face, we don't put more than 10% on any one exchange, and we're always on the hunt for developing strategies, not just across exchanges, but within exchanges too, because you get more capital efficiency if you don't have to keep moving things between exchanges. But counterparty risk is our biggest risk, so we like the older, biggest exchanges with very high profit margins and very high cash flows. And you take, for example, there was a press release by Binance where CZ was interviewed by Bloomberg, and he said that they're going to finish the year at 800 million to $1 billion of cash flow or of net profits. How many businesses do you know that are 4 years old that have $1 billion of EBITDA? I mean, it's like mind blowing, right?
That's unbelievable.
There are many unicorns in the world, but having $1 billion of EBITDA
Right.
is 100 times better than having a market cap of $1 billion.
Right. Right. No, 100%, 100%. And I mean, I think
like Huobi, they burn their tokens, let's say, equal to 20% of their revenues. And from that, you can estimate that this year they'll have an EBITDA or net profits of 800 million a year. I mean, it's incredible. So with that type of cash flow, they can invest in security. And if there is a loss, they can cover it out of their own pockets. I mean, you take CoinCheck in 2017, if you recall, they had a $500 million hack of a coin called NEM. And they covered customer losses out of their own pocket because at the time, their run rate was, $1 billion of EBITDA. So they can cover 500 million out of their own pocket. They have the resources and the incentive to do so because they want to keep the customers happy, to keep the machine running.
Right. No, it certainly makes sense. It certainly makes sense. And so what are some of the other biggest challenges, obviously, other than counterparty risk, that you guys face? And kind of following that up, where do you see the biggest competitive threats and biggest opportunities?
Well, the thing that we're really would love to have and are waiting for is Goldman Sachs offering custodial and prime brokerage services, or Morgan Stanley, Credit Suisse, any of the top 10 prime brokers in the traditional finance that serve the funds. If any of one of those got into prime brokerage custody, that would really propel us. Now, it would help the competition as well, but it would help us a lot. So that's one of the biggest.
So what specifically about Goldman entering prime services would be helpful for you?
Well, as we all know, there's been a huge boom or huge growth of startups providing custody services. You take Fireblocks or Copper or
Anchorage, BitGo. There's so many of them. Yeah.
BitGo, Coinbase.
Yep.
They all offer custodial. Fidelity offers custodial services for crypto, but it's not for high frequency traders because it takes a while to move stuff out of a bank.
Cold storage.
Cold storage, which is in a vault in the Alps of Switzerland.
I mean, one of the biggest things that always worries me is I'm like, if you get margin called and you have funds in cold storage, like, what do you do? I mean, you have to borrow overnight, I guess. But like, I mean, to me, that's like one of the biggest risks and one of the biggest challenges.
Yeah. So it's a big, right now, the biggest risk is counterparty risk. The biggest challenge is getting custodians that can serve, I would say high frequency traders, but traders that trade every minute or every hour.
Yeah, traders rather than investors, I think even. It doesn't even need to be high frequency.
Right. And then the next step is right now we have very interesting technology offerings from current custodians, but none of them have a balance sheet like Goldman Sachs or JP Morgan or Credit Suisse. And none of them offer prime brokerage services where you could put money in a custodian and you could trade on 20 different exchanges. There are companies like XMargin that are moving in that direction and have that on their roadmap, but it doesn't exist yet. There was an announcement by JP Morgan that they were talking to some of these custodians, and I verified that because we talked to custodians too, that JP Morgan was thinking about maybe going to these custodians and having them be the sub-custodian, but you have the JP Morgan name and balance sheet.
Yeah.
And that would be a game changer.
And State Street, I think, was testing that with Gemini as well at some point.
Right. No, that would be great. If you get State Street's balance sheet and Gemini's technology, that would be a game changer.
And so what are the biggest opportunities? I mean, either for Pythagoras, for crypto, for the industry, like where do you think the biggest opportunities lie?
Well, Bitcoin at 20,000 opens up a whole new set of opportunities compared to Bitcoin at 10,000 or at 3,000. And it's kind of like uh, you're drilling for oil, and you're drilling for oil, and the price of oil is $50 a barrel, and all of a sudden it goes to $100 a barrel, and it goes to $200 a barrel. All of a sudden, a lot of marginal things that did not work at 50, they work at 100 or they work at 200. So at 20,000 Bitcoin and maybe someday 30, 50,000 Bitcoin, it just opens up so many more things in the world. I mean, mining looks completely different. The economics of exchanges, the economics of trading, everything changes when the price goes way up. So, use your imagination. So many more things are possible.
And so, kind of to that point, and I think you may have read that I wrote this. We have not asked any of our guests, or we've asked them actually to refrain from making price predictions in episodes, because I think, generally speaking, people in hindsight look very wrong. And a lot of times these price predictions are baseless. But I think there was something that you wrote in a blog post on November 11th, which is about a month ago, a little bit more than a month ago, which I kind of want to read, and I kind of like to get your take on that, which is that personally I'm bullish. I subscribe to the argument that there's a limited supply of Bitcoin like gold. And with all the government printing presses going full bore, inflation will creep back after the pandemic, which will drive up the price of Bitcoin. I think Bitcoin will hit an all-time high of 20,000 within a year. Obviously, that was correct. It took only a month. But the chances of it doubling are equal to the chances of the price being cut in half. I don't take 50-50 bets. So my question for you is, how has your outlook changed over the last month? Are you holding, or have you ever held long term? But I think to kind of tie back in what you said earlier, one of the things that you said earlier is, if we had gone into mining, or if we had just held Bitcoin back in 2014, we would have been way better off. Do you feel like potentially we're in a situation now where, there are more opportunities to be a holder or to invest in infrastructure than to operate a systematic, market neutral fund?
It depends on your risk return profile. So let's say I had bought Bitcoin when I first got in. It was Bitcoin was about 800. It had dipped down to as low as 100. But let's just take an example. If I bought it at 100 and I'm up 100x, since then there have been at least 3 times Bitcoin's been down 90%, and there have been maybe close to 10 times it's been down 50% on its way, going from 100 to 10,000. Do you have the stomach or the discipline or the emotional character or capability to stomach 90% losses? To tell you the truth, the first 90% loss, I would have been out. Or the second 90% loss, I was stupid the first time. I'm going to be like stupid again. So it just depends on your risk return profile, right?
Right.
So
100%.
So arbitrage is a slow and steady 1 to 2% a month with never being down.
And so how do you benchmark then? Do you have a benchmark?
Well, if we use buy and hold Bitcoin, we'd be in the cellar, right? The benchmark of my investors is my investors mostly hold traditional stocks and bonds, right?
Right.
So you compare our fund to the S&P, you compare it to holding T-bills, and some compares to holding gold.
Right.
And over the last 6 years, since we started in 2014, cumulatively over 6 years, we beat all those benchmarks.
Right.
And there's something about benchmarks is that if you're a fund manager, you never choose a benchmark that beats you. You always look for benchmarks that you beat.
Yep.
And I'm fortunate that we beat the S&P, T-bills and gold over those those 6 years. And as soon as they beat me, I'll eliminate that as a benchmark.
Fair enough. Fair enough. One of the other things that I found interesting actually is I was looking through your form Ds and your form DAs, as I love to do, one of my favorite things. And one of the things I noticed is that, you only have you have a small number of investors, but that have invested a large number of a large amount of capital. And so, obviously not asking you to name, your investors, but are these family offices or these high net worth individuals? Who are you actually going to, and who's are the people that are interested in investing in you? You said they're investing in more traditional assets. Are they invested in crypto more broadly? Or are they more invested in just the opportunities that a systematic strategy in this space, offers? And has that changed?
Yeah, we don't have many investors. I mean, and we we ourselves, me and my couple of business partners, are the second largest investor in our own fund, right? One of the first things, because I also invested in outside hedge funds, not just crypto, but other portfolio of hedge funds. One of the important questions you ask is to the manager, how much of your own money is in your own fund, right?
Yep.
You want to cook that's eating his own cooking.
Yep.
In terms of our investors, we talk to a lot of family offices, high net worth individuals, and it's hard to raise money in this business because it's crypto. I mean, the good news of being being in crypto is a double-edged sword. Because it's crypto, you have inefficiencies and trading opportunities. The bad news of being crypto is that it's hard to raise money. So our biggest investors are fund of funds from the traditional space, which have every conceivable investment strategy in the traditional space.
Yep.
And we're their one crypto allocation.
Got it. And so, that said, then what are your thoughts on, all this new institutional investment in this space and all of the capital that's been pouring in, primarily to Bitcoin, or almost entirely to Bitcoin over the last month, I would even say, or, last few months, obviously.
I don't know if you read, I wrote an article.
I did.
Listing the biggest investors have come in just in the past month. It's just,
and I think now that list needs an update just from yesterday.
Yeah, I know. I didn't add Mass Mutual to it, and now I have to add the fact that Pornhub being rejected by Mastercard and Visa has to take is taking crypto for their services. I was joking with a friend. They asked me, "What's driving the price of Bitcoin these days?" I said, "It's the Pornhub announcement." But the list of institutional investors, it's really amazing. All of a sudden, you have Paul Tudor Jones, Stanley Druckenmiller, Alliance Bernstein, Mass Mutual. I mean, the list goes on and on and on. BlackRock, all now endorsing Bitcoin or saying they have 1% or 2%.
Yeah, the CIO of Guggenheim yesterday going on Bloomberg and throwing out a $400,000 price prediction, and I don't know if you saw that. And Bloomberg and the anchor at Bloomberg was like, "What?" He's like, "We're supposed to have. I think they were supposed to go to a Fed speech or something." He's like, "This is the first time we've ever delayed a Fed speech." Like, what did you just say? And it was just it's been wild. So, what do you think the ramifications that's going to have on the space? Where do you think capital is actually going to flow? Do you think it's just going to continue to flow to long positions in Bitcoin? And does any of this recent price euphoria feel bubble like? I mean, you mentioned you've been here for so long. You've seen 390% corrections and obviously many bubbles along the way. Are you getting any of that same feeling this time around?
Yeah, well, each time is different, right? And this time feels different because now, as opposed to just retail people, jumping in, it's big institutions jumping in. So that's different. And there's a broader base of investors. So it feels different, and I'm bullish, but as I say, there's a 50-50 chance whether it's going to go up 50% or down 50%. But it's definitely different than 2017.
And so kind of, going back to Pythagoras, what types of data are you guys still primarily or almost entirely arb? Are you guys looking at alternative data yet in any of your strategies? Is that something that
We're,
you're
we're always looking at anything that can give us an edge, right? And we're approached by many alternative data providers, people that collect sentiment, and we're constantly testing all of them. And if something works and we can explain it, we put a little bit of money into it and try it out, and keep scaling it, but with risk controls.
and so what do you think are the largest data challenge, or do you think there are large data challenges in the space, and where do you think they exist? Like, I mean, I know that, you know them as well. The FPG guys love to talk about how terrible the Gemini API is all the time and how it always goes down. And, obviously that's more of a technology problem, but, what are the problems that you see in this space, and kind of the biggest opportunities from, I guess, technology and data as it relates to even just market data?
Well, we get I wouldn't say it's a huge challenge, but certainly APIs going down and is a big thing. We seem to get the data that we need from the exchanges. I guess one challenge is not in trading, but in the middle office and back office, because to run an institutional fund, you have to have a credible auditor, like our auditors, KPMG, and they in turn depend on the fund administrator or the accountant, the outside independent accounting firm that reconciles all the trades on a daily basis. And they're always having challenges. If you're trading 1,000 trades a day or 10,000 trades a day, that obviously is an automated process. And sometimes the accountants are I don't know, not getting the data, or the data from the exchanges is coming too slowly, so they can't produce reliably and timely daily NAVs. Now, we don't distribute daily NAVs, but we need to reconcile on a daily basis. So I think the challenges are more in the middle and back office.
And do you think that that's going to be worse with DeFi?
Oh,
than it is with
clearly.
yeah.
Oh, DeFi is a nightmare in that category. And then the tax, God knows, spent hours and hours with the tax accountants on how looking at the tax implications of DeFi. It's a whole rabbit hole that.
I did an 1.5-hour podcast episode just on the tax implications of DeFi, so I've been down that rabbit hole. It's
well,
it's deep and long and far.
I'd love to get that podcast and give it to our tax accountants, because they're ripping their hair out over how to.
Yeah, the guy I was talking to Dan Hannum, who's a friend, he's the COO of Zen Ledger, which is one of the companies providing tax services, and they're talking about how looking at they have to run their own nodes now on the Ethereum blockchain to pull transactions, and just it's I'm glad that I'm not in that business, because it does not seem like a fun business to be in.
Right.
And so you mentioned earlier that you're an active investor in other funds, whether that be VC, PE, hedge funds. What types of funds are you allocating to other crypto funds? And if so, what types of crypto funds are you allocating to, and why?
Right. So in general, before I got into crypto, and still simultaneous with crypto, I have a robust family office because of the all the power plants that were built and sold in the 70s, 80s, and 90s. So I've always invested in hedge funds and run hedge funds. And the family office portfolio has is in all a broad, diversified portfolio of every asset class expressed through funds, mutual funds, private equity, venture funds. The only thing we do directly is real estate. Within crypto, I like some of the venture funds. So the family office is invested in Polychain, a couple of the Pantera funds, Blockchain Capital, Block Tower Capital, because we're getting exposure to early stage blockchain companies or early stage crypto companies where we don't have expertise, but we want exposure to that space because we're in general bullish about the space and we understand the space. And there's some strategic value because, like I mentioned, X margins. I learned about them because Polychain had invested in them, and now it's a group that we might be able to do business with in our funds. In terms of crypto trading funds, we like seeding early stage traders that maybe, like for example, I'm thinking of a guy who spent his whole career trading traditional options and has a real edge in understanding and trading options and is new to crypto options. So we're seeding his fund. I'm going back now to 2014 and 15. There was a trader that was very good with futures, traditional futures, and designed the futures product for OKEX and HORB. And we gave him money to trade crypto futures. And it was a very useful and profitable relationship. And we learned a lot from that exposure. In general, I say we go into other crypto trading funds that are either better than us or different than what we do. It's not difficult to be better than us. So that's not a terribly high bar. And to be different, that's not a terribly high bar too. But we like to go into funds where we can also add value, where maybe they're good traders, but maybe we can add something in risk control. Or maybe they're good traders, but they need the exchange relationships. Or they're good traders, they have something, but we can also add value and work together in partnership. So we're always on the hunt for good talent. And we don't pretend that, that our people are the most talented in the world. I believe that we have very good, talented folks, but talent is all over the world. And we're always looking for those opportunities.
And so I think given that you made a number of venture investments, and obviously, you say that that's not, what you're best at or what you're focused on. But one question, obviously this is called the Fundamental Value Podcast. And, part of that tries to discern what is the quote unquote fundamental value of Bitcoin and other digital assets. And so how do you even start to think about fundamentals for digital assets? And does it depend on the token?
Right. Well, I don't think there's a lot of fundamental value to Bitcoin itself. I think there is fundamental value in the blockchain technology, but blockchain technology wouldn't be famous without Bitcoin. And Bitcoin, what was the name of that beer? Was it Miller or Schlitz, the beer that made Milwaukee famous? Bitcoin is the currency or the item or the thing that made blockchain famous, right? But by contrast, you take some of the DeFi tokens or the exchange tokens, they actually do have fundamental value in that they have a cash flow. Like you take the HOIB token, HT, or the OKB, the OKEX token, or Leo, they actually produce a cash flow. So obviously there's fundamental value in having a percentage of revenues of an exchange. Or in DeFi, they have cash flow because they have users that are using it, and there's a cash flow associated with the fees of DEXs. So there are some tokens that do have fundamental value. Bitcoin itself, it doesn't have fundamental value, but a little bit like gold, its price depends on supply and demand.
And so what has you most excited as either a crypto investor or as an investor most broadly in 2021?
Well, all of us in the community are extremely excited about the fact that Bitcoin at 23,000. In the last couple of hours or last night. So that's super exciting. It's always good to get favorable press in the industry, because the industry has had so much bad press. Uh, on the opposite side, what's been the biggest disappointments are all the continuous hacks, right? I mean, the hackers are, doing better than many investors in Bitcoin, because they're so successful at stealing and hacking. Just a friend of mine the other day, this is kind of sad. She had all of her crypto or Bitcoin in, I think it's Ledger Nano or something like that, and she got an email or a text from Ledger saying, there's maintenance, just reply here. And she replied there, and next thing you know, $2 million of Bitcoin were siphoned out of her hardware wallet. And you just hear these stories all the time. I mean, the biggest scare we had this year was the OKEX scare, where Star Sue, the founder, was arrested by the police, and they had to suspend withdrawals for 40 days. It was the worst 40 days I spent this year. I read that the CEO of Nexus Mutual got hacked, and somebody stole, 8 million of NXM from him. And it wasn't just like some random person that held Nexus Mutual. It was the CEO, and he got hacked. So that's the biggest disappointment of the year, is the increasing number of hacks and how clever the hackers have become.
Yeah, and when, kind of dealing with risk management with your fund and interacting with DeFi, I mean, that certainly must be a very large consideration that you have with interacting with anything.
Yeah, no, anytime we go into a new thing like DeFi, the thing is always like, what's the downside? What's the risk? When we're considering these custodians, look at the custodians. What happens if there's a technology failure with a custodian and you can't get your crypto out of the custodian, right? So it's an exciting space where everything's new, everything's growing. But as we know, sometimes pioneers are the ones that end up with arrows in their back.
Yeah, I think that's very well said. And so my final question, and like to usually end up with something not crypto related, is, you're very involved with a number of different philanthropic ventures. And so what are the causes that you are most passionate about, and where do you hope to be able to make the most difference?
Right. So one dream is to eliminate all coal-fired power plants and replace them with solar. I worked in the solar industry and the hydroelectric industry for over half of my career. So that's one dream. But where I put my money philanthropically is in public health. And I've been doing this since I was a teenager, working in public health. And the motto that I most subscribe to is that an ounce of prevention is worth more than a pound of cure. That it's better to prevent disease than to get the disease and come up with a corrective medicine. It's far cheaper to prevent the disease than to cure it afterwards. So my money goes to the Harvard Chan School of Public Health, and endowing professorship, scholarships, and funding research there. And hopefully, not hopefully, they're having a big impact on the current pandemic, and hopefully in the future, preventing future pandemics and getting people aware of the importance of public health.
Awesome. Yeah, I think that's very well said. And I really appreciate having you on, all your insight. Where can everybody find you? You have a blog, you have a website, and I'll make sure to include all that in the description. But
sure. Well,
let everybody know.
The company has a website, Pythagoras Investments. I'm on LinkedIn. I have my own website. So love to hear reactions from your listeners.
Awesome. Well, thank you so much, Mitchell. I appreciate it.
Okay.